If you want to learn how to trade just like me, join the community, click the private Discord link, sign up through this membership level, and you will gain access to weekly group mentorship calls for free. Welcome back everyone to another quant update. Hopefully you guys tuned into yesterday's video. We were calling out this huge weekly inverse head and shoulders, massive bullish reversal chart pattern over here that's meant to take us back into a key level of resistance, which is once we break, it's going to change absolutely everything. So it's vital to see this $130 area being broken. Otherwise, if we get a rejection from there, there's always that risk that we go in for a new low, simply because I'm measuring this using this Fibonacci tool. I'm measuring this massive wave down. It's giving me the retracement levels for optimal exit points or entry points for a short. Now, of course, if we want to go into a bull market, we can't let this happen. And so in today's video, I'm going to show you the process of invalidating that new low. So make sure you stay tuned, like, subscribe, comment, and share, and enjoy today's update. And if you also want to get educated by myself, wait until the end of the video for more further explanations, or head straight to the website. Links are down below. So 130, why is it key level? Because it was a previous double bottom over here. Now I know I'm on the weekly, but on the daily time frame, this area where we pushed through and eventually lost it as support was a daily head and shoulders pattern that I previously called for a 106 target, which was met right over there. So previously this was a bullish patterns neckline and a bearish patterns neckline. So for some months on the channel, when we initially got this move up and started consolidating, I said the next target would be 130, and the reasons were, of course, what I just mentioned, the neckline of two patterns. In yesterday's update, we actually placed the Fibonacci's, which gave us further confluence, further confirmations that what we were thinking was indeed correct. That this level, $130, is going to be a huge, first of all, psychological level that we must face, and also this point where we could get sent to new lows. As it's also the golden pocket, we would say if it is reclaimed, we're flipping bullish as the reversal wave is created. However, what I must say before we get into those potential targets is that usually when we spot a pattern and we meet the technical target out of a pattern, we reverse. And it's quite annoying that this target out of this weekly inverse head and shoulders only sits at the neckline of this previous double bottom and bearish head and shoulders. It's also the golden pocket. Remember guys, when we're looking at a push up or down, it's never a straight line as I've just drawn. It usually has a wave up like this, correction and continuation. Usually has a wave down like this, correction, continuation. It's never a straight line. We always retrace. And that's what the whole point of this Fibonacci tool is. It's a retracement tool, giving you the best entries essentially. So I'm measuring this push down. It's giving me the retracement level for an optimal sell entry, but we need to see this completely invalidated. And so unfortunately, although the head and shoulders pattern is a bullish one, it's on the weekly time frame, bringing more accuracy. The target itself is at a previous resistance and support, as well as the golden pocket. And so for that reason, it's likely that we dump from here. I would love for it to just push through like butter. If it does, I'll be the first to let you know. And I'll say, look, we're now going to these targets to the upside. But as we have a target, and usually when a pattern meets its target, we tend to reverse. This bullish pattern will complete and then reverse. And then the level of support that we then need to hold in order to invalidate further downside below $84, $83 is for the bullish cross to form here on the weekly time frame. What I'm going to do as we are heading up to this target is actually watch this on the 5-day time frame. Why? Because this signal could come a little bit earlier than the weekly. This is like a precursor time frame. Essentially, it's just skipping 2 days of the week, 5 days instead of 7. And so we're going to see signals appearing much earlier on this time frame. Look how close the 20 and the 55 are over here. Whereas if we go to the weekly, they're a slight bigger distance away from each other. So we can see that if they were to cross, it would happen earlier and on the 5-day time frame rather than the weekly. And so if the 5-day has a bullish cross, maybe eventually the weekly will too. So if you do have the paid for version of TradingView, I would recommend using the 5-day. There will also be a few more candles than the weekly time frame, maybe making it easier for you to read the actual Japanese candlesticks or maybe the chart patterns. So for this example here, it's quite simple to spot the patterns on either of these time frames, but there are examples in my past of trading, where it's been better to use the 5-day for the reasons that I've just explained. Now, once we meet the technical target, we're expecting this dump. And so I would assume by that point of reaching the target, we would have seen the bullish cross, whether that's on the 5-day and the weekly hasn't done it yet, or they've both done it, that would be even better. At that point of rejection and meeting the target, we're expecting that bullish cross to hold. So once we get up to 130, rejection is most likely, and we want the moving averages to hold as support to then have another go at breaking through, creating the reversal wave finally, and then validating these targets to the upside. Not only would we validate $200 to $250, but we would also validate this technical target all the way back up to our previous all-time high over here. And as you can see, this would form a huge double bottom, essentially, with a higher low. So again, with double bottoms, you don't need to come all the way to the bottom again, to the first bottom. You just need a higher low, and then you create your neckline. Boom, that's $200. Break through 200, and you validated the double bottom, essentially. And on this second bottom over here, we've now spotted the inverse head and shoulders pattern that's meant to eventually send us higher, as long as all of the supports, of course, are being maintained. So once we get to the technical target and face this resistance, we need to fall back and confirm the moving averages for follow through, and then the reversal wave being created for at least this $200 technical target to, of course, happen. So I think that this is where we'll stop at first, as this is the highest body candle close, so we might get a rejection off of $200. That's where I would be targeting next, out of the break of the 130 and reversal wave being created. Thank you so much for tuning in. Like, subscribe, comment, share. I want to know your thoughts though. Do you think we will get rejected and put in a new low, or do you think it will come shy, it won't put in a new low, we'll just put in another higher low on the moving averages, create the reversal wave to meet these technical targets? Thank you so much for tuning in. Like, subscribe, comment, and share, and I'll catch you in the next one. If you want to get educated, use the links down below. Cheers, everyone. I've got a whole bunch of educational content, and over here on the website, you can see loads of other people taking action recently. If you want to get educated, simply scroll underneath the video, click take action or Linktree, and click the option that you want to read more about, or private message me on Twitter. Let's start off with the ebook. This is where you can take action on my ebook, teaches the exact strategy. Head over to the membership level if you want to become a Discord channel member, where you have access to 2 weekly group mentorship calls, or if you want to take action on my 6-hour-long pre-recorded course, there's an offer here, and you do get Discord chat for 2 months totally free. Here is my beginner one-to-one mentorship plan, which includes 3 hours of my one-to-one help, the course, and 2 months free in the chat. And there are some other plans here for 5 or 10 hours of my one-to-one help. Use the links down below to private message me on Twitter, or head straight to the website using one of these links to take action. Cheers.